Good evening, everybody, and welcome to Millionaire Mindset Mondays. I'm Jan Carmanico Reeves, your host, and I'm on a mission to make real estate investing fun, easy, and profitable. We are here every Monday night at 6 p.m. EST, and we have amazing guests that join us. Tonight, we have Ben Boileau, is that correct?
Yeah, great
um,
pronunciation.
who's a care home investor. So, welcome, Ben. And why don't you tell us a little bit about yourself?
I appreciate it. So thank you, Jen. I've been investing in real estate for the past 7 years, although I've been involved in real estate as a property manager for closer to 15. Initially, I was a high cap investor, so I've done everything from burrs to flips. Really found my niche was within high cap multifamily burrs. And so I was in markets that had significantly higher cash flow. My investment philosophy has always been that intrinsic value is directly proportional to cash returned adjusted for risk. I know that's a mouthful. What I mean is that an asset's true value should be directly proportional to how effectively it functions as a business, how much cash it returns back to the investor. And that's how I take a look at everything that I do. Over the past 3 years, though, I discovered a segment that aligned with that philosophy and also allowed me an opportunity to give back to the community in large. And that's the care home asset class within multifamily. So 2.5 years ago, I picked up a group home, and that was because at the time I had a brother who was actually coming out of forensic mental health and going into a group home himself. And so while I was taking a look at cash flowing assets, this was an opportunity for me to get a look under the hood and see how these properties actually function. In learning about the business, I found that this was a business that I really connected to, and it actually, I mean, numbers wise, it was superior to the multifamily that I already owned at the time, which was quite surprising. So I decided to take the plunge, and I acquired it. I've been managing it now for about a year and a half, and to date, it's been the best performing asset in my portfolio. So over the past year and a half, I've also pivoted entirely towards care homes. I have also similarly a mastermind that I host biweekly with care home owners, operators, and interested parties who are also interested in learning about the care home investing segment of multifamily. And so a lot of this is about partnership. It's about trying to find the specific skill sets that each person has that they can bring value to make these homes uh, highly profitable, but also deliver a lot of value to the clients. And so that's really my mission is to help to empower impact investors to generate substantial returns so that they can generate more value to the community.
Excellent. Very good. Thank you for that. So, tell us about how you structure your partnerships.
Sure. So in a care home deal, partnerships are critical because there's a lot more things that you need to consider. For instance, we have a function for risk and compliance and health and safety. So one of my partners, Valeria Ray, she is a nursing consultant and she runs a 350 bed long-term care home. Excellent partner. And so she helps to take care of the risk side. On the underwriting side, that's where I'm particularly strong as well. So I love the numbers. I love the spreadsheets. And then also, I also come with an operational efficiency background where I can dig deep into the numbers, understand how the business is functioning, and improve it, reduce the expenses, and increase the revenue sources. So I've been doing that for about 10 years as well as part of my consulting career. And then on top of it, we have people that are more involved in the marketing side. And so, instead of being a jack of all trades and master of none, as a business, we really need to be able to find the people who excel in their specific area of the enterprise and of the corporation and leverage their skills so that we can grow faster and stronger. And so that's how I structure more the active side of our business. Of course, we're always looking to work with investors that understand this asset class or would like to learn more about it, as everybody that pitches in to help and add knowledge end up indirectly improving everybody else's understanding as well.
Very good. And so how many people are on your team of active partners?
Got you. So, I mean, so I feel like there's a small core group right now, and then there's a much larger community. So, of the core group, there's myself, Valeria, Bava, and Kiran, who are kind of our core team that are looking at this specific opportunity that we have under contract right now. However, on a broader sense, we still work with a number of other members of the community. Some of these individuals have done large projects of 150 beds, turning them into 170. So they've done full burrs. There are other members of the community who have done development projects, so that have put shovel to the ground and built facilities from the ground up. And so they all make a part of the larger team because as a community, what we do is we take a look at different opportunities in the space, and I borrow from their skill sets to help to underwrite these deals and understand if these deals are profitable, if they make sense, and whether we go ahead. And so when we identify a opportunity within one team member's specific skill set, that's when we combine forces and we decide to form a partnership.
Okay, so I guess it would be different partners for each project.
That's correct. Because at the end of the day, everybody has their specific skill set. So it's very important to match competency with the demand or with the need. So depending on the type of care home, as there's a number of different types, we'll have different partners that will join us for those opportunities.
Okay. And of course, you bring in financial partners to the deal as well.
Yes, oh, definitely so. So we're constantly in the process of educating financial partners on the benefits of care homes as an asset class.
Mm-hmm.
And really, a lot of our focus, we have a couple really strong passive and semi-active members of the team who do come with capital, but we have a continual effort to help to increase the knowledge of the care home segment so that we can help other traditional investors understand the difference between typical multifamily in this space.
Right. Okay. And so how do you structure those deals then? If somebody just wanted to invest passively, are you like do they have to be active as well, or is it just straight up active
Oh,
partners,
no, no.
passive partner?
Oh no, I have passive partners on the deal that haven't ever been to the property and are very happy with their returns. I do have some partners that are a little bit more active and like to learn more about what it is that we do as well. And I'm happy to provide opportunities to both types. Some of the deals that I've done have been a straight partnership. So where it was me and a financial partner that would come together and we would work out a fair split of the equity. And then there would be a period of capital repayment and then a splitting of the profits afterwards. In other cases, on the larger deals, what we typically do is we put the asset into a corporation. That corporation, we have different share types, and there will be the limited partner share types. Those will go to the investors. And so the investors, they like the passive investors, they own shares pertaining to their particular investment type. And then the active partners will take the other percentage of the shares into their own corporation. So I know there have been GP-LP structures as well that have been proposed. What we find, and our both our lawyers and accountants uh, typically are providing a recommendation that until you get to a certain size of deal, like I mean the 10 million plus, the GPLP structure can be more expensive than necessary for compared to the protection. So that's just some of the advice that we've been receiving.
Okay, so you're not setting up GPLPs. So then you're setting up a corporation and people
Correct.
own shares in the corporation.
Yeah, yeah. So the basically the asset itself, which will be the business and the lands, will be owned by a holding corp, and then the holding corp will the shares of that will be provided based off of the split between the active partners and the passive partners.
Okay. So typically it's the asset is in a holdco.
Correct.
Yeah, right?
Yeah,
Okay.
yeah. I'm sorry. I apologize. I thought you heard me. Yeah,
Okay. And so
yeah.
how do you um qualify, say your partner's active, passive, what kind of qualities do you look for? Do you have a screening process or what do you do to set up for each deal?
Yeah, no, it's also a great question. On the passive side, and so I'm a very firm believer that people who invest capital need to have uh, a, a base level of understanding in order for the opportunity to make sense for them, in order for it to be a stable relationship for us. So I always try to make sure that uh, well, I always make sure that whoever that we accept as a partner is able to describe what it is that we're trying to do and understands at least the fundamentals of multifamily investing. Typically, our investors have spare capital upwards of 150,000 to even as much as a couple million, and they generally are have done a couple real estate transactions themselves and have learned from those experiences. We do offer education, though, on the care home sector so that it's not a massive gap for them. So, for instance, a multifamily investor who has done a number of deals who has seen value in either the BRRRRs or whether they have a couple buy and holds, it's not a massive leap between multifamily and care home investing. So what we try to do is just provide it free education to everybody that's interested. And then when they get to a point where they feel comfortable with how these investments differ and how they work, that's when we would have a further conversation with them about what we have on the go. On the passive side, when it comes to working partners, I think it's very important to choose people who have a similar alignment in values and mindset over where it is that they would like to go compared to yourself. One of the things that I've had challenges with in the past in different partners is that there was the financial piece, maybe we all aligned at, but in terms of what it is that we want to create or our investment philosophies, some things have differed. So I've been very careful in selecting partners that have the same goals for investors and have the same vision in terms of the value that we're here to create. So that's the first part. The next part is really proficiency and skills. And some of those things you only really learn as you work with people over a period of time. So I would say, initial selection is about values and hopefully, some reputation as well. But then over time, as you work with people, you really get a sense for the true value that they can bring, their efficacy and like work ethic. And so through the process of working with more people, you really start to refine your partnerships.
So what has been, say, your worst partnership experience? What would you not do again? How would you avoid the pitfalls of lessons learned?
Fair question. You know, I think back to maybe the first business that I started as. the worst experience that I had. So I started a property management company in university, and I managed to find some partners that were very strongly motivated, um, and helped me to get from here to here. The problem is we didn't have the same vision for the company. And at the end of the day, the only thing that we really had in common was money, that we all wanted to make money. The problem with that is, whether you're looking for a short-term return or a long-term return, those things can be cause disalignment. If the leadership hasn't been established, who is in charge of what role, that can create significant friction. And these were the types of things that we were experiencing in our early partnership. When we actually got to the point where we were making our budget and our plans for the following year, that's when there was a massive falling out. And unfortunately, another thing that I've come to learn is how to pick partners ethically as well. As those partners ended up taking a lot of the business contacts and operations and just ran with it. So they actually stole parts of the business. So that was a negative experience. Fast forward, I would say making sure that people have a track record of success is one key thing that I've also learned the hard way as well. I mean, I've worked with partners that have talked a big game, but haven't always actually been able to put rubber to the road and really deliver, right? So, you need to be hungry, but you also need to be ethical and you need to be aligned. And so, I mean, I've done a lot of cases where I've had high hopes for some people. I've taken them onto the team, and then they didn't work out for whatever reason because they just maybe they thought it was going to be easier, or maybe their vision wasn't as strong. And so when it came to being motivated, um, we might not have been on the same page initially, and so that led to some challenges in the future. So yeah, I mean, it's a careful balance between finding people that are really motivated, and have their own driving force and passion, as they will help to carry you through, but then that can cause problems later on. And then finding people that are not too passive, who might align with your vision, but not provide the rubber to the road work that you need in order to help move your business forwards. And I've had poor experiences on both sides of that equation before I help to refine how I choose and work with people.
So, what process do you use now to pick your partners for each project?
So, you know, I, it's funny because I mean, I'd say a lot of it is it's organic, but there probably is an opportunity to improve the structure for how I do it. Um, I like to work with people that I know, like, and trust, as I'm sure we all do. Um, uh, but I've learned that outward appearances are not equal to inward results. So, although before I was judging people based off of, let's say, their social media or how they're portrayed in an outward sense, I've realized that there's no substitution for good old fashioned interviewing and understanding of accomplishments. So before, I would be like, hey, this person has accomplished A, B, C, and I can see this on social media and that they look very successful. And I would take that as my grain of truth to bring that person into the circle. Now, what I do is I have a structured conversation with them, similar to how you would hire a new candidate, and ask them about their experience, ask them about how they handled certain things, and really get a sense for how they handle challenge, how they handle failure, what their true accomplishments were, what they contributed to those accomplishments. So, I mean, interviewing is it's almost like the lost art of real estate that somehow, it exists in every other field, but it's something that I've only, I guess, really learned is also necessary to take on new partners as I've started to develop and evolve myself.
Right. So do you have a specific list of questions that you pose to potential partners?
Well, there's definitely some things that I always make sure that I ask, right? So to me, it's really important that people are comfortable um, and honest with their failures. So I don't think that anybody has gotten to any level of uh, true success in this field without having had some bumps in the road. And that's probably the same thing in most people's careers as well. So um, I think it's very telling when people understand where they failed and what they learned from it and how they apply those learnings to future opportunities and how they've demonstrated that. So that's one of the things I really like to ask about is how people have failed, um, uh, what exactly they did that contributed to it, and then what they've learned from it and how they've demonstrated it. Other things I like to learn, of course, is just what their success level is. What was the largest project that they were involved in? How many doors they have either under management or have handled in terms of creating value for themselves. Some people are flippers, of course, so if they sell things off, then that's important to know. Um, and what their investment philosophy is also an important question for me. So I need to know that whatever direction we take with our portfolio and uh, the decisions that we make as a group, that we're thinking with the same head from the same place. So I also, that's why asking people about their investment philosophy is very important to me, because at the end of the day, there's two very different, I think, polar philosophies within real estate investing.
So, what advice would you give to our listeners about how to choose their working partners?
Um, I think before you can really choose effective partners, uh, you need to really understand yourself, right? Know thyself, right? Is the first place that I think everybody needs to start. I think before you can define who's going to be good for you, you need to understand your own capabilities, failures, where you're strong, where you're weak. You need to understand your investment philosophy, what you believe in, and like what your vision is for what it is you're trying to create. I don't, I'm not saying that, people aren't going to be successful if they are just in real estate to create wealth for themselves. But I do believe that uh, in order to really be successful, you need to be focused on creating value for others, whether that is other investors or clients or both. Because that alignment and that mindset, it allows people to think long term about how to create value. And just having that mindset means that people are regularly practicing creating value for others. So I would also uh, advise that when people are choosing partners, that they choose partners who are really interested in the well-being of their clients, as opposed to just talking about the opportunity and the benefit for themselves.
Okay. And where do you find your partners? How do you go about searching out people to?
I mean, that's this might sound a little crazy, but I believe that people tend to attract what they put out. Um, and I think as long as you are congruent with yourself and you are a person that is providing a how do I put it? I don't want to just say an aura, but like, I mean, if you are um, providing an intention to the people around you that you meet, you'll naturally attract the people who are interested in the way that you think and that you behave and that you act. Um, and the only other thing is to be around more people and to create the number of interactions. Wealth Genius being a fantastic group as an example, or a number of other networking groups. Like I know that Keyspire, and there's a whole large number of like real estate networking groups where people can interact with other professionals. And I think that those places are a great place to just meet and learn about other successful investors. But first, I believe the work is internal. You identify what your investment philosophy is. You figure out what it is that you want to do to create value for others. And then you interact with other people to refine that understanding and that idea. And then you will continue to run into more people that align with the good that you're trying to do.
Okay. All right. So, what would you say has been your most successful um, joint venture partnership to date?
Sure. So actually, the group home that I bought in Thunder Bay was to date my best investment. A very excellent a deal, and it taught me a lot about this field that I didn't know before. So we bought this. It was initially going to be a buy and hold, interestingly enough, well, it was about, let's see, 67,000 per bed. Um, and without even having to do very much, I quickly optimized the expenses, reduced the costs, and increased the margins so that I increased the cash flow in the business from about a 12 cap to a 14 cap. And then I find out that the appraiser who did the appraisal for the property doesn't specialize in it. So we got it for well under market value. And now it's being appraised at a 10 cap, which is significantly increasing the valuations. So it is the top cash flowing asset that I have, and it was a full burr without having to put in any actual um, construction cost, just by reducing the expenses and improving the operation. So very low risk. Day
Okay.
one cash flowing heavy, no investment in order to add value, and it is a full burr. So full burr, high cash flowing, and no capital at risk.
So, what was the best part of the partnership that worked out in that
So
project?
my partner, great individual, he's a physician. Um, he initially was kind of who I was leaning on to make sure that I understood the policies, the procedures, and the things associated with a care home and providing care for individuals to make sure that everything was done right. So he added a lot of value initially by helping to make those things make sense for me, because there was a lot of things unknowns, right? So that was extremely helpful. And what's great about it is that he didn't have to continue to do that. So he leveraged his knowledge once, helped me in the very initial phases in order to get me set up for success. And then he basically backed out and has been an entirely passive partner since. And I've managed to run this very successfully, and have gotten us to this point where it's paying back well over all the capital, and so still cash flowing substantially more than anything else I have in the portfolio.
Very good. So the best part of that partnership, so he came in as an active and money partner and then transitioned into just a passive partner?
Pretty much. So, I mean, I chose him initially because, I mean, this was my first purchase in this segment, and I wanted to make sure that I wasn't missing anything. So, he added a lot of value up front, right? Helped me to make sure I wasn't missing anything. I think that's very important for anybody who's getting into any new field or anything. Always make sure that you have people that can cover your blind spots. And so this was a great way for him to leverage his skill sets, his very substantial skill set, but it not have to be something that he needs to continue to contribute. It was very successful because he helped me to get into this asset class, helped me to develop a new skill set, and helped me to build brand around care home investing in general. And as a result of that very targeted skill set and knowledge set that he had, uh, it allowed us to make a success of this investment, which is paying off substantially for both of us.
So how did you structure that agreement?
Sure. So in this particular case, it was a 50-50. So um, he came in with the capital minus a BTB that we also had in place. So I did negotiate a BTB with the seller. Then I had the other half of the capital provided by my passive investor. The agreement was that there would be some value that would be added by him in order to help to set it up front. I did all the initial work in order to make it work. And while I didn't have much capital in this, very little, the understanding was instead of him collecting an interest on his capital invested, he would just be paid out first, whether it's through cash flow or refinance. And I would be putting in the work in order to make it work. And that would be kind of the equivalent. So instead of him receiving interest over and above the capital return, I was putting in work and that equivalated it up. So at the end of the day, once all the capital is paid back, it's a 50-50 split, with the exception of the work that I will continue to do. So I'll be paid for the work as a salary once the capital is repaid back. And so I'll collect and like a fee for continuing to manage the asset and make everything work. And then outside of that fee, the cash flow will be split down the middle.
So did you bought that under a new corp, or did you
Sure.
set it up as a joint venture agreement, or how did you what
Yeah.
were
So,
the legalities behind it?
oh, got you. Okay, I understand. Yeah. So we purchased it under a corp.
Hmm.
And then also this was a share allocation. So half of the shares went to my partner, half of them I kept to myself. And yeah, so I mean, we both have equal rights to this opportunity. So we're both decision makers in this particular case. And then in addition to that, we structured a shareholder loan. So the shareholder loan meant that any capital that was returned against the shareholder loan was not to be considered income. It was a return of capital, and so it could be collected cash free. I mean, tax free. And that was yeah. So that was how it was structured. Um, does that answer your question? I just want
Yeah,
to make sure
I
that.
think so. Yeah.
Okay.
Yeah. So you did you purchased it under a new corp
Yes.
and then had a side joint venture agreement for the corp,
Um,
or you just had a shareholders agreement?
right. So the really that yeah, there wasn't a joint like there was a shareholder agreement, like a shareholder loan agreement that specified that capital needs to be paid back towards those loans first.
Mm-hmm.
And then The joint venture portion, because there was a couple terms, just specified that because the loan, the shareholder loan, was non-interest bearing, that for the remainder of the time while the principal was being repaid, the work that I do to maintain the property isn't paid work, right? So that like I'm not collecting a fee over the course of this project until the capital is repaid. And so that was that was the agreement. And then following that, once the principal is repaid, I either have the option to hire somebody else to do the job of managing the asset or negotiate a payment for myself.
Okay. Okay. Very good. So you haven't spelled that out yet, what the payment will be once there's a full return of capital.
Yeah, I haven't. Um, Part of the reason was we didn't know upfront how much work it would actually be in order to maintain it. So this was definitely a relationship based off of trust, and I very much do trust my partner and vice versa. Um, but now that I know what it takes to run one of these, I have an idea of what it is that I will charge for that type of work. So.
Okay. Very good. Very good. So, any last tidbits you'd like to share with our listeners about partnerships and your experiences or things to avoid in structuring partnerships?
I mean, there's a lot that we covered today. Just to maybe recap quickly, I think it's really important first that anybody that is part of your team is first focus on delivering value to your investors and to your end clients. Um, that's your tenants and the people who are investing with you uh, and providing capital. Also, I think it's very important to make sure that you have enough experience to provide value in whichever fashion that you're looking to provide and not decide to be a jack of all trades. Make sure that whatever you specialize in, whatever area you're really comfortable with, that is the scope of your work. And you take on other partners that are specialists in all the other areas that need to be done. I think you also need to take a look at your business. Everybody needs to do this and break out the key functions that make that business successful. This is one of the principles of Hoshin Connery from Lean Six Sigma. If if you can understand the functions of your business that are required to succeed, and most of them are pretty similar, like you need asset manager, boots on the ground, underwriter, investor marketing, um, you need property management. If you list out all those functions and then make sure you're only picking the functions that you're good at and you're finding somebody else that's good at the other ones, then your corporation is going to be in good shape.
Very good. Excellent advice. Thank you. Well, thank you for joining me tonight, Ben, and for sharing your experience with partnerships. And um, I'm Jan Carmanico Reeves on a mission to make real estate investing fun, easy, and profitable. And we will see you all next week. Have a great night, everybody.
Pleasure.